Is this a triple bottom in Coinbase, or is this going to continue falling? Is Coinbase failing? Is this distribution? These are all questions that we're answering in this video and in our Clarity Spotlight on Robinhood last week. The lesson was really pretty simple from our spotlight. Oversold is not a signal, location is. And coin was the risk appetite tell that we used, because when coin is stable, fintech and higher beta brokers have room to work. When coin is sliding, bounces across the group tend to fail. So the question is really simple. Is coin going to hold this lower boundary of its 2024 and 2025 range? Or is that range failing and we're looking at a deeper repair phase? But before we get into that, quick disclaimer. This video, as well as all trade therapy content, is for educational purposes only. It's not investment advice. Trading involves risk, including the risk of loss. Trade according to your own plan and according to your own risk tolerance. Full disclosure, we don't have a position in Coinbase. Before we run through a couple of charts, we always like to stop to make sure that we're looking at this through an institutional lens, because institutions don't try to predict the next candle. They build a risk map, they identify decision levels, and then they demand proof that those levels have been reclaimed and held. So that's what we're looking at. That's what we focused on this week. Let's take a look and run through the evidence in order and see what we can determine. What we see when we look at this clean all-time weekly chart for Coinbase, we see that coin is no longer acting like a clean continuation here. We do see a pullback. We see choppier tape with lower confidence. We see failed attempts to hold higher prices. We see price driven back down into this prior decision area, the zone where buyers previously stepped in during the advance. So what does this mean? This is what transition looks like when institutions shift from pressing upside to managing exposure. The move back into this zone isn't automatically bullish or bearish. It's a test. What institutions are testing is whether or not demand is still there at this level. We need to see stabilization. We need to see a potential higher low develop here, because if demand is not here, the market's telling you that it needs a deeper reset before risk appetite can come back into the crypto space. So what are we watching out for? We want to see stabilization. We want to see tighter candles similar to what we've seen previously at this level. But we want to see bounces that hold, not a spike up that fails really quickly. We want to see a constructive response. We want to see a bounce and then a calm pullback that holds this decision area. We want to see price come back up, test this longer term moving average, the 200 weekly exponential moving average, and then move higher and retake some of these other moving averages and back test them, very similar to what it has done in the past. We'll jump over to our annotated weekly chart here. We see this ABC corrective wave down here and the potential for a triple bottom forming. We also see the structure starting to tilt, possibly with lower highs developing. And when we see sell-off carrying momentum, which is what the C-leg often looks like, we want to see that higher low develop. A wick down testing this low is fine, but what we don't want to see is a lower low developing and then a recovery attempt that fails and forms a lower high. It would not be surprising to see a lower chest or potentially even a lower low just below this range, taking all of these lows out before we see a recovery. So that's what we're going to be watching for. We're going to be watching for range defense. A range only works if this lower boundary keeps getting defended. Is this the area where institutions in Wall Street are willing to defend, or will the scenario play out where they will be looking for a slightly lower C-leg type move? It can stay fast. It can stay emotional until it reaches a level where demand is ready to step in. And that's really the whole game this week. So 2 scenarios: bullish path, coin stabilizes here and then begins retaking the shorter term moving averages in a similar sequence to what we've seen in the past. The bearish scenario is that coin cannot hold this range floor. It will come up and test these moving averages and then continue to fail down. Coin's not a chart to trade on hope right now. It's a chart to trade on behavior. The location is pretty obvious. The decision is whether or not institutions defend here or whether or not they want to take it a little bit lower and get underneath the potential liquidity pockets here underneath these structural lows. That's how you separate a real reset from a trap. That's all the time we've got for Coinbase this week. We'll see you back here on the trading couch next week.